It's time for the Your Personal Bank Show with Ference Toth, financial literacy educator and speaker, entrepreneur, and chairman of the board of Bank Information. Take charge of your financial future with Your Personal Bank. Now here's Ference Toth.
Welcome to the Your Personal Bank Show, and I tell you what, I talk a lot about how Your Personal Bank works and some of the uses that people find commonly used for this financial tool. I thought it'd be fun today to kind of go over maybe use some of the specific examples of various clients that I've worked with over the years and some of the ways or the tools that they've used the personal bank concept to their benefit. So before I jump into that real quick, again, a quick reminder, or those that you haven't heard, what Your Personal Bank is basically set up a high cash value policy. This is not the type of insurance policy most people are familiar with. This is one that's designed to maximize cash growth. We have companies that are paying even 6% dividends, even today, have been paying that for the past 25 plus years. I'll show you the charts of all the top dividend paying companies. And literally, some of them have never missed paying a dividend since literally before the Civil War. So these are A-plus rated multi-billion-dollar financial institutions who've been paying dividends for, well, a really, really long time. And they're designed to do that. They're set up to do that. They're well positioned to continue that for, well, basically for the foreseeable future. In fact, one of the CFOs I know a couple of years ago, for example, he made a statement. He said, look, if we added no new clients today, we could pay our current dividend rates for the next 100 years. So I think they're going to pay their dividends. And by the way, most of these companies have a 4% contractual minimum guarantee, just so you know. So they have to pay dividends. It's not like it's not a choice, okay? Like I said, they're paying 6% plus for the past 25 plus years, never missed since before the Civil War. So that's really powerful. And then when you throw in the other aspect of we're not designing these to maximize death benefit. We're doing the opposite, the exact opposite of what most people are familiar with when it comes to life insurance. Most people view it as a tool to, as death benefit protection tool. That's not what we're doing here. Yes, there is a death benefit, but we're minimizing it on purpose and maximizing the cash and the dividends on purpose. Oftentimes, as much as 60 to 90% of the time, just so you know. So very powerful, what does that do? Minimizes the cost of insurance, which is one of the number one questions I always get. Drops it by 60 to 90%, by the way, right off the bat. Also, the cash can grow in the policy on an income tax-free basis if it's set up properly, which of course we do. And you can access it on a income tax-free basis and pass it on to your heirs that way also, income tax-free. So and then the last part of it, a lot of people don't think about it, there's actually a long-term care. They're called living benefits. And what it is it's like if you have long-term care type needs or expenses, you have access to a portion of the death benefit early to pay for those things. This can be hugely significant because, well, statistically speaking, the average retired couple, their number one expense or financial risk happens to be long-term care expenses. And I've done workshops on this and studies on this. The average cost of long-term care, it varies, but it's somewhere around $250,000 today, total costs. And that can put a significant dent into somebody's financial situations, particularly for the survivor. One of the advantages of the personal bank concept, of course, or the policy is funds are available for those types of expenses. The beauty of it is you don't have to be in a facility. You don't have to submit any bills. You just have to have a doctor certify that you need that assistance, and the money is yours. So one of my statements I often share all the time is, in my opinion, it's the best long-term care plan out there, because if you need it, you got it. And if you don't, well, you didn't pay any extra for it. It's included. So what could be better than that? So when you add all this stuff together, setting up a policy, again, that's designed to maximize cash growth, 6% plus dividends the last 25 years plus, never missed since before the Civil War. You can grow those dividends income tax-free, access the money tax-free, pass it on to your heirs tax-free. You have a death benefit in place, minimized cost and everything else for your loved ones or your heirs in case something does happen to you. You have funds available for long-term care type of expenses if that becomes a need, that you don't pay any extra for that. And last but not least is the second piece of the personal bank concept, and that is we bring in the bank line of credit. When you access funds, you access the funds from the bank now, not the insurance policy. So what happens is the policy is earning dividends, getting paid, right? And then when you access the funds from the bank line, they charge you interest. And the beauty of it is the dividends you earn and the interest you're charged, there's a positive arbitrage. Today, typically you can see upwards of 5.75 to 6% dividends, depending on which companies we go with. We're independent. We can work with just about everybody, so I can shop it around for you, show you the best ones. Secondly, the bank lines are charging between 3 and 3.95% interest when you access the funds. So I ask a real simple question to folks when I discuss this with them, and I ask them this. If you're earning high 5s or 6% dividends, let's say, tax-free, with guarantees, all that good stuff, and then you decide to access funds for whatever reason, and you're getting charged between 3 and 3.95% when you access those funds, what's your money doing for you? The answer is quite simple. It's obvious. You're still making money. You're keeping the difference. And that's called positive arbitrage. Today, the positive arbitrage difference is between 2 to 3%, depending on how much money we're talking about. And historically speaking, over the past 40 years, we have documents from some of the companies that have shared this with us, that the positive arbitrage has occurred every single month for the past 40 years, except for 2 months, and those 2 months that happened to be equal. So you didn't lose anything. So my point is, I say this all the time to people. Look, I cannot guarantee that you're going to have positive arbitrage between the dividends you're earning and the interest you're getting charged when you access the funds from the bank. But in the last 40 years, you would have positive arbitrage every single month except for 2, and those 2 you happen to be equal, so it didn't hurt you any. That's powerful. A couple other quick thoughts I get asked all the time about the bank line is, the cash in the policy is collateral for the loan, so it's a fully collateralized loan. Doesn't affect your debt-to-income ratio. You don't even have to have very good credit to qualify. It's super easy. Just don't have any judgments or liens, of course. The banks will loan up to 95% of the cash value in the policy, so you're going to have access to most of the money right out the gate. And again, they charge no interest, no fee. They don't charge any fees, closing costs, points, nothing. There's no cost to set up the bank line. And again, they only charge interest when you access and use the funds. Now, let me share you with the last quick thought about this. This is a very common question, and this is where it makes it even better. A lot of people will compare this to like a HELOC or home equity line of credit, where you're accessing a line against a property, for example. A bank will issue a bank line. Now, when you use those HELOCs, you, of course, or a cash out, those kinds of things, you have a monthly payment you have to make back to the bank. Well, here's the beauty about how this works. It's even better. And it's this. The bank does charge interest, like I said, but the interest they're charging is less than the dividends you're earning, so you're still making money on funds you spent. Remember that. Never forget that point. This is on funds you spent. You're still making money. But the key to the interest is you have a choice. You can actually choose to pay the interest out of pocket, of course, or you can, if you haven't max borrowed from, maximize your line of credit, you can just say to the bank, just increase my line. Now, if you have the funds to pay back or pay down your line, should you? Of course. I always encourage people to do that. But there's no requirement to. Again, as long as you didn't completely maximize your line. Now, that's awesome, because what does that do? That actually gives you more flexibility. It gives you more control of your money. In other words, you can pay back the line on your schedule, on your time frame, when it makes sense for you, not for the lender. So that's what I talk a lot about, control. These days, a lot of people are concerned about where we're going as a country and the government and all kinds of different things in terms of levels of control freedoms and things like that we're going to have in the future. Here's a way for you to actually get back control some of your money, if not all of it, depending on what you want to do. And you won't be subject to the rules of, say, like IRAs and 401ks and all the myriad tax rules and penalties and everything else that comes into play with those types of accounts. Now, again, I'm not saying you shouldn't do those kinds of accounts at all, but what I am saying is you should have an alternative. Should have another bucket of money that is not subject to all those rules and is not subject to all the future taxes and everything else. And again, the money you have control over, use of, access for any reason, any purpose whatsoever. The banks don't ask you what you need the money for. You just send them a form or call them and they send you a check. In fact, I was asking a couple of the banks, do you have some ideas? Because I was, sharing this show, I wanted to share some more ideas of specific ways that people have used this tool, this financial tool, your personal bank. And they're like, well, we know a lot of people use it for a lot of reasons, but we don't have any specific examples because, well, we don't ask any questions. We don't know what they use the money for. It's their money. So that's the beauty of it. Again, it's your money. Look, if you want more information on this, of course, contact us at yourpersonalbank.com. You can schedule a free, no obligation consultation to see how this works, or just get some more information, or, of course, stay tuned to the Your Personal Bank show. But my point is, when you add all these things up, again, maximizing cash growth on a consistent, steady basis in most cases, income tax-free growth, tax-free income, tax-free income. You can access it tax-free, pass it on to your heirs also that way. And when you do access it, actually gain interest, positive arbitrage, keep the difference between what the dividends the insurance company is paying you and the interest rate that the bank is charging you. You keep the difference, which is typically around 2 to 3% historically. You have a death benefit in place, God forbid something happens to you, to protect your heirs. And lastly, a long-term care type of funds available for those kinds of costs or fees or expenses, I should say. When you add all that up, and then, again, you do access the funds, and you can choose and control the payment schedule back, there's a lot of advantages to using Your Personal Bank tool in your financial portfolio. So I went through it real quick and all that, but what I want to do, so I'm going to encourage you to stay tuned in the next segment. Because what I'm going to do is, like I said, we're going to do something a little fun. I'm going to share some stories of some folks who have, every single one of these are actual clients of mine that I've worked with directly, and some different ways that they have used this tool to enhance their financial future for themselves, their families, and their business. So stay tuned. Don't miss it, because it's going to be a lot of fun and I think very educational also. So stay tuned.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank show with Ference Toth.
Welcome back to the Your Personal Bank show. If you missed the last segment, I'm just going to tell you we're going to have a little fun today. I'm going to share some stories of some particular examples of how many of my clients over the last number of years have used the Your Personal Bank financial tool really to enhance their financial situation. And this applies, individually, families, businesses, you name it. And like I said, I talk a lot about how the personal bank concept works, and I talk about uses in general. I'm going to try to get more specific today. Now, I'm not going to use any names or anything like, so you won't, nobody will identify who the folks are. But I can assure you, these are all real live cases of folks I've been working with for a number of years, in many cases, some of them for decades, frankly, and how this tool works and how it's worked for them more specifically. So if you want a refresher, or you don't really realize, or you're just catching this, don't really follow what is Your Personal Bank, how it works, go back to yourpersonalbank.com, listen to the first segment. I go over a quick example. I share real quickly how it all works. So let's do this. Let's talk about a few examples. I'll start with some of the more common ones, and where I run into a lot of folks do this. I mean, frankly, the most common way that my clients, and understand, we're talking about literally, our company has nearly 5,000 clients in total. Personally, I've worked with probably in my career well over 1,000 clients. Not all of them are personal bank clients, of course. We do other things, other financial things. We do a lot of the IRAs and 401ks and annuities and various other financial tools, retirement planning, things like that. I've been doing that for 22 plus years, okay? And speaking around the country, doing workshops, all types of different things. Now on the radio for the last couple of years almost now. So we do a lot of different things, but the personal bank concept is the one that we focus on the most, and of course that's what the show is about. And the reason is, by far, it's the one most people are the least familiar with, I should say. Yet, oftentimes, and I'm going to say easily 80, 90% of the time of the folks I sit down with, provides the most benefit. Like I stated in the previous segment, there's so many benefits to this. Anywhere from the guarantees, the underlying guarantees, elimination of market risk, income tax-free, growth, income, pass on to the heirs. That's so powerful. Access to the money, liquidity, positive arbitrage. You put all those things together. The funds available for long-term care type of expenses. You put all that together. A lot of people use this for a lot of reasons, and most of them use it for more than one reason, frankly. But the number one use I see of the personal bank concept, frankly, is well over half of my clients just put the money in the high cash value policy, getting anywhere from high 5s to 6% dividends plus, and have every year for the last 25 plus years. And that's good enough for them. In other words, they're using it as a long-term, consistent, steady Eddie account to grow their money. Again, steady, consistent, with guarantees, income tax-free, and they like that for many reasons. A diversification tool, if nothing else. I mean, it's a great diversification, for example, versus, say, somebody with investments in the market, the stock market particularly, but also things if they're, invested in real estate or other various assets. This is an awesome, tremendous, great fit in terms of a diversification tool. It's a non-correlated asset. And basically, if you don't know what a non-correlated asset is, and very briefly, it's just an asset that's its price or its value is not related to another asset. So, using a great example, most stock market type of portfolios, of course, are subject to market risk. The underlying companies and then the market and the economy and everything else pretty much dictates or determines the price or value of a stock. And that's common knowledge, pretty much. Most people know that. There's other factors, of course. But this is a dividends, consistent, steady, with underlying guarantees. The steady Eddie consistency of it, and that's what a lot of people like. So, look, 6% is good enough for me. I like it's consistent, it's steady. I like that, it's a diversification or whatever, and it's a long-term retirement plan for them. Again, it's got a death benefit associated if something happens prematurely to them, a long-term care type benefit for funds available for long-term care type funds or expenses, I should say, if they need it for those reasons. It fits a lot. It checks a lot of boxes. So that's that's the most common. So I call them I refer them to as my passive investors. In other words, they're the folks that just put the money away, let it ride, and their intention is really to supplement retirement. Ultimately, when that either now or when they retire. So that's pretty easy to understand. It's pretty straightforward. Again, if you're looking at it for that purpose, pretty much strictly. You're comparing this investment versus others, and the benefits, again, are guarantees, safety, taxes, income tax-free, those kinds of things. Diversification, those are reasons for doing it, okay? The long-term care, funds for long-term care expenses, the death benefit, all those are reasons to take a serious look, okay? And like I said, contact us at yourpersonalbank.com for more information if to find out more. We'll put it that way. Probably the next most common purpose or I see of this use is I have a lot of entrepreneurs that use this tool for a number of different various business purposes. And I'm going to get into a few more specifics here. Some of the most common ones are real estate investors. Real estate investors love this tool. It fits like hand in glove for their needs. Some of the things that, and I don't even know how many real estate investors I have. It's hundreds who are using this tool. The reality is, the needs of a real estate investor are, they have to have high liquidity, cash. So a lot of, because if they're going to buy a property, and many times in short time windows, I get a lot of them say, I need the money to, I've made an offer and I got to get the money turned around in 24 or 48 hours. Because of those high cash needs and quick turnarounds, most financial instruments don't work in conjunction in the needs of a real estate investor. So most of them, before I meet with them, they have their money sitting in a bank account, checking or savings account, that kind of thing. And of course, for the last decade plus, the problem with that, as we all know, is they're not earning any interest while that money's sitting there, basically. Nothing to speak of. I mean, if they're getting 1%, they're lucky. So this allows them to get the 6% dividends, access the funds through the bank line of credit, most of the funds, day one. And we're talking 80% plus day one if we structure it correctly, which of course we do. And now they get positive arbitrage of 2 or 3%, again, depending on the amount of funds we're looking at. So my statement to a real estate investor is always, what's your average ROI, rate of return on investment? And, I'll hear all kinds of different percentages, but let's say it's 10%. I hear that one quite often. I'll say, great, do you want to make 12 or 13 on the same money? And the response is obvious. Well, yeah, of course. How can I do that? This tool allows them to do it. So it's just a way to enhance their real estate investing business and get a greater return, get some extra tax benefits as a result. Of course, real estate investing has a lot of tax benefits, another reason, and income opportunities if you're talking about buy and holds, for example. But there's different ways to do it. It just fits really, really well. So what I'm going to encourage you to do is stay tuned in the next segment. We'll talk about some other uses that I see used quite often.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to the Your Personal Bank Show. Today we're having a little fun. I'm sharing some stories about a number of my clients. I'm not going to use any names, but specific examples of how many people that I personally work with over the years have used the personal bank concept to enhance their financial situation. In fact, I talked about in the last segment, I talked about a lot of, the entrepreneurs, business owners use this tool quite extensively. I'll use a personal example. So one of my first uses of my personal bank policy was our financial agency. Like many of them, businesses are seasonal. Okay, so I always say, in Phoenix, we're located in Arizona. In the summertime, if you can get out of town, you do. So a lot of our clients leave during the summer and take vacations. I do the same. I've shared this story many times with a lot of folks, not to brag or anything, but 7 or 8 years ago, we decided to, I'm half Hungarian, so I've got, always want to go back to Europe and just take my family and my wife and the girls to see what it was like, and myself too. I was born here, so I wanted to see the old country where my dad grew up and things like that. And so we decided to go and spend some time in Europe each summer. So we've been blessed that we've had the opportunity every year except last year, of course, because of COVID. We spent a month or so in Europe, and so we're gone too, and so that's a slower time for our business, obviously. And then, of course, Christmas time is another time of the year where, folks don't want to meet with a financial person typically. And I often joke, frankly, I don't either, because I've worked hard all year and I want to enjoy the time around the holidays with my family too. So no hard feelings. I get it. I feel the same way. So because our business and we've gotten a lot more efficient because of technology and now because of COVID and stuff, where almost everything's virtual. I've met with in the past year, literally, physically, maybe a half a dozen clients. all this past year or so, it's all been by computer, go to meeting, Zoom, that type of thing. And frankly, I was doing that for a number of years prior to COVID, even because prior to COVID, I would speak to various investor groups around the country and, do workshops and various things, educate them about the personal bank concept. And then, of course, we would meet by phone and computer, Zoom, go to meeting, that kind of thing afterwards and throughout, and did business that way. So it wasn't a great change for us. But before all that, I had a full office. We had 15 W-2 employees. I had something like 20, 1099 sales staff. So, we had a lot of overhead with our business, and we did a lot of workshops and seminars and, just lots of, I said, we have over something like 5,000 clients. So, bottom line is, during those slower seasons, oftentimes I would have payroll like any business has. And we didn't, sometimes the business, we all usually had the funds, but sometimes we didn't. And so like most businesses like that are seasonal, you have a line of credit at the bank. And you tap the line for those periods of time that are slower. And then when the busier times of the year in spring and fall, you pay down the line. What I got to realizing after I learned about the personal bank concept and all, I've come to realize, wait a minute. When I access those, I'm accessing the funds from the bank line for the business because we got business expenses. And we don't have, the only reason I'm accessing the funds from the bank line is because we don't have the money at that point in time. And so we're short funds, of course. And then we have to pay interest to the bank on top of it. And, it kind of, I don't know about you, but it kind of feels like when you have to do that, it kind of feels like you're a dog. It's like kicking a dog when it's down, if you know what I'm saying. And when I realized I could access funds, we could fund a personal bank policy, access them through the bank line of credit, and still receive some interest on it, the difference, the positive arbitrage. So I'm not only not paying interest, but I'm still earning some interest while using the money to cover business expenses and can pay it back on our own schedule. No monthly payments required. We could just tell the bank to increase the line. So we could pay it back on our own time, our own schedule. So there was no pressure. There was no stress. I'm going to tell you, folks, when you have a business where you have to pay, tens of thousands of dollars per month in overhead, that can be stressful at times. Ask any business owner. If you're a business owner, you know exactly what I'm talking about. And the personal bank relieved a lot of that stress. In fact, once we got it set up and had some funds set up in there and we tapped it various times over the years, and of course then repaid it back each time, my wife commented, she goes, I've noticed you're not as stressed out, as you were before. There was a noticeable difference. So one of the things I share with people all the time is life is more than just making money. I'm a financial person. I get it. But there's a lot of things in this world way more important than money. I mean, money's important. Don't get me wrong. We need it to do what we do and live in our society. But there's a lot more things like reducing the stress because you don't have to worry about cracking that nut this month and making those expenses because the money is there. So whether it's a business or a personal household, this can benefit greatly, which I'm going to talk about in the next segment, some particular examples due to COVID that are very interesting. So stay tuned.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to the Your Personal Bank Show. This is our fourth segment, I should say. I was going to say we're rounding third. I used to say that all the time. I'm going to have to change heading home. I'm going to change my phraseology because, well, I don't know about you, but I'm kind of frustrated with Major League Baseball right now. So maybe I shouldn't pick on MLB because I like baseball. I like sports in general, but I'm not happy with them. But that's another whole topic. Today we're having more fun, actually, trying to take a little more lighthearted approach, but also educational in terms of sharing stories of how a number of my clients, these are all examples. In fact, the last segment, I use a personal example with my own business, how we started using the personal bank concept for our business. We actually later then added additional personal bank policies for personal purposes. And, it helps offset personal expenses when there is a variation in income, right? Which, due to COVID, obviously, I ran into that a lot this past year or so, as you can well imagine. So again, think about this. We've got hundreds of clients, hundreds and hundreds of clients using these personal bank policies, funding them, accessing funds through the bank line of credit to use for various purposes, whatever that may be. And some fund them all up front. Pretty much they just dump all the money in one chunk up front. You can do that. We can discuss how that works. Or you can fund it over time. It's one of the common questions I get, over a number of years. And you can do it monthly, quarterly, annually, whatever. It doesn't matter. The point is what works for you, what makes sense. And like I said, determine which way makes the most sense. And sometimes we do some of both. Okay, by the way, right out the gate. Sometimes we do a couple of them. Contact me at yourpersonalbank.com. I'll be happy to free consultation. There's no cost or obligation to kind of share and answer questions and put together a preliminary plan to see what might work for you. Which brings up another quick question, and then I'll get into some more stories. Is I get asked all the time, what are your fees, like the management fees and to meet and stuff like that? There aren't any. We get paid when we recommend a product for clients. We get paid commission. I tell the people that right up front so they know. I think it works really well because companies pay us. That way we don't know, somebody doesn't have to pay us anything out of pocket. We certainly could charge fees to, we have the licenses and things like that to do that. Just have chose not to because I as a company and personally don't feel like it's necessary to get paid twice. Many financial advisors do that, get commissions and fees from clients. I'm not saying that's a bad thing or a wrong thing. I'm just stating it's a fact that's how many operate. We choose not to. I find most people prefer that. Again, if you're open and honest and upfront about it, one of the statements I make all the time is pretty much, if you think about it, if a financial advisor recommends a product that you purchase, for the most part, you can pretty much be assured they're getting paid somehow from the company, right? I mean, it just makes logical sense, regardless of what title they use. And I get it. I know some people get upset and frustrated with that in the industry when I start to share that kind of thing, but it is true. I mean, it's just basic logic, common sense. Anyway, that's another whole topic. What I want to get focus on is, so if you want to contact me, there's no cost or obligation, okay? Let's look at your situation and see what makes sense. That's all. And if it makes sense, we move forward. And if it doesn't, we don't. The vast majority of the time, it does. And you can see from some of the stories I'm sharing, you can see some of the reasons why. So I started to allude to COVID. Obviously, when it first hit, there were a lot of people who lost jobs. Their businesses were shut down, various situations like that. And what was really awesome about it is I was able to be the angel of mercy in many cases as a result. Because also, think about it, at that same time, the stock market had March took a huge dump. It did come back rather quickly, but nobody expected or knew that was going to happen at the time. So here they're like, I've got money in my IRA or 401k or my brokerage account or whatever, and the market's taken a huge hit. I don't want to take money from there. My business just got shut down due to COVID, or I've just been laid off or cut hours, or I'm not sure how much longer I'm going to have a job, all those kinds of things. I mean, there were a lot of fear. There was a lot of stress, a lot of concern. And folks who had dumped money into it, of course, had funds available and said, well, how much do you need? Let's get you some money to get you through to whatever you need. Those that were, say, funding it over time and, say, even putting in monthly payments were saying, would contact me and say, I can't put any more money into it right now because I don't know if I'm going to have a job or not, for example, or things have already been shut down, all that kind of stuff. And I said, here's the good news. Well, the good news is you've been funding this for over however much time they had been doing so, right? And you have X amount of dollars in there now available to you. And here's what we can do. We can stop the funding for a while. Heck, we can stop it for the next year or couple of years, even if you want. No problem. We just contact the company, let them know. And this is true all the time, not just because of COVID. This is just true all the time, okay? So when things change in your life, you got lots of options and lots of flexibility, and we're able to help people. Plus, I said, not only do you not have to add any more money to it for a while, but also you have X amount of cash available. You can access it through the bank line of credit. Even though you don't even have a job, think about this a minute. You don't have a job anymore. You don't have a business anymore. You don't have an income anymore. But we're going to access funds from this and a bank's going to send you money. Try doing that when you don't. Try qualifying for a loan when you don't have income all of a sudden. Yeah, good luck, right? This ain't going to happen in most cases. So here you were able to do it. It wasn't based on income or anything like that. The money was available. It was there. And I was like, how much do you need? This is how much you have available. How much do you need? And the awesome part about it was, I can say this now, over a year later, we didn't lose a single client. I didn't lose a single client through COVID. Because what happened, and many lost jobs and businesses or took big cuts and major changes in their lives. Many moved, all kinds of stuff. But we didn't lose a single client that I'm aware of, a personal client of mine, and we're talking hundreds and hundreds of them. Because the money was there, and this was the tool that actually helped them get through the struggle, the financial struggle. That is awesome. And they were still earning some positive interest at the same time. So they weren't sabotaging their retirement, but they were getting through a financial crisis. And many times they had nothing to do with it. It sprung on us. We didn't expect this, right? Now, I've seen this happen over and over again over the years when people have personal financial crises. Jobs are lost, businesses get shut down or cut back, or people get injured or sick, or things, the economy takes a change or whatever. Competition comes in and whatever. I've had people that have gone into work and said, hey, you have a job. Congratulations. Good news is you have a job, but if you want to keep it, you have to move to India. I literally have clients that have been told that, more than one. Okay, so we all know what I'm talking about. My point is, this is the tool that was in many cases, the only financial tool where they had access to money. They hadn't taken a hit on it. There were no losses. They were actually able to still earn some interest. And then when they got back on their feet, able to catch back up, and all the compound interest, everything they'd earned, contributed previously, wasn't lost. I mean, I'm telling you, I feel tremendously good about that. And that's the end result of a tremendously impactful event like COVID in terms of a lot of people's economic situation. So when I say, look, having a cash reserve, someone thinks it's not subject to market risk or tax risk and is available and liquid and all this other kind of stuff, still earns, lets you catch up, lets you not contribute to it for a period of time, a couple of years even, no problem. Again, depending on your situation. We've seen it firsthand this past year. It's impossible to beat. The market wasn't cooperating for a while. Later it did. But again, at the time, nobody knew that was going to happen, did they? You see my point. And so I feel tremendously awesome about that. So that's a very common example that's occurred, particularly, it's happened over the years, but it's happened this past year a lot to a number of folks that I worked with, okay? I've got a kind of an interesting example. One of my clients is a doctor, and he saw the benefit of funding monies into the policy, accessing them through the bank line of credit, again, to get the positive arbitrage on his money flow. There's some people that use it this way. In other words, he saw, he goes, I have money coming in personally through my practice and all that, and he's in Scottsdale, just so you know. So his business is seasonal. Got a lot of the winter visitors, right? He's busier in the winter than he is in the summer. And he said this would get me through the slower time and let me stock up on, he's a naturopathic type of doctor, stock up on a lot of supplements and things like that when the fall patients come back. And over a period of 5-6 years, he's been able to flow through 5 different personal bank policies through him, his wife, his kids, his adult kids. Basically 100% of his money that comes in, flows through his policy. Then he accesses it through the bank line of credit and pays his expenses, bills, living expenses, both personal and for his business now. And he's picking up a couple percent, 2 to 3% positive arbitrage on all that money. Think about that a minute. Think if you could pick up interest on every dollar that comes into your business or into your household. And do that for the next year, 5, 10, 20 years or more. how much more money would you actually have then that you could use and spend? We're talking a significant amount of money, okay? Another big tool, of course, is debt payoff. I have had a lot of people that, they're burdened or saddled with various different debts, everything from, student loans to credit cards to houses, cars, you name it, whatever. And many times we're able to take a chunk of money. Let's say they say, well, let's reallocate. Here's the thing. If you have an investment that makes 7%, let's use this as an example for just a minute. Let's say you have an investment that averages a 7% rate of return for you. And let's say you have a bill or debt over here that the interest is 7%, happens to be 7%. Are you making any money with your investment? If the amount of the investment and the amount of the debt are the same, the answer is no. You're just breaking even. You're not making any money whatsoever. So if you have a $50,000 investment and making 7% and a $50,000 bill that you're getting charged 7%, it's a wash. And so my point to people like that all the time is, well, wouldn't it make more sense to just pay off the debt? Because here's the advantage of paying off the debt. What if you put the money in the policy, like I said, then access it through the bank line of credit and pay off the debt, or most of it, let's say. Well, if you have enough to wipe it out, what happens? Well, that interest payments, first of all, the debt's paid off. So the monthly payments you were making, gone. The interest that you were paying, also gone. Now, is it as effective to earn 7%, say, an investment versus not paying 7% interest on a bill? Are they equal? And actually the answer is no, they're not equal. It's actually better to pay the debt off than make the investment. Why? Well, first of all, in most cases, the investment's not guaranteed, right? So we're not certain we're going to make the 7%. We could make more, we could make less. Another reason is oftentimes, most time, the investment is taxable, isn't it? And either it's taxable now, or if it's an IRA, 401k type thing, it's going to be taxable later. But the bottom line is you're going to have to pay tax on it, right? In most cases. When you pay off debt and you're not paying 7% interest anymore, that's guaranteed, isn't it? Because if you don't pay it off, you got to pay the bill, right? So if it's gone, that expense is gone, guaranteed. Tax-free, isn't it? Which is better? You see my point. But then let's add the last piece to this. You could pay off you're actually better off paying the debt in most cases than having the investment, everything being equal in terms of the amount of the investment and the debt and the interest rates being earned and charged. If everything's equal, you're better off paying the debt than having the investment. Now, I know most financial advisors won't tell you that, but that's financial literacy. But what if you could bring in your personal bank concept, fund it through the policy, access to the bank line of credit, and now pay off the bill and receive positive arbitrage? Now you're ahead. Contact me at yourpersonalbank.com for more information. And as always, we look forward to hearing. Listen to the Your Personal Bank show and stay tuned.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. This show is designed to provide accurate and authoritative information. The presenter and guest on this program do not engage in legal, accounting, or tax advice. Professional advice regarding your situation should be sought if required. Products and riders may have limitations and may not be available in all states. Excessive unpaid loans may affect performance. Distributions may become taxable if not managed properly. Replacements may not be suitable for everyone. There may be charges when replacing coverage. Compare when considering a replacement. Dividend rates and baseline of credit rates may change. Contact yourpersonalbank.com for current rates.